increase it by pesos.
Good.
Maybe 50 pesos.
You can't get
or
change.
80 pesos. You would actually pay your calculations. You want to increase it by that.
Okay.
But you would find customers coming in and wanting you to remove the pesos from it.
Good.
So I usually go by the CD margin.
Okay.
So if the margin should increase by 80 pesos
Okay.
or 50 pesos, I round it off.
Oh, to 1 CD.
To
Okay.
1 CD.
Yeah, right.
Or if it's 1 CD and some pesos, I round
Okay.
it off to 2 CDs.
Oh, good.
So if previously was selling for 33,
Good.
this time you come and I say 35.
Good.
Nobody complains.
Yeah, right.
But you say 35 CDs, 50 pesos. They'll say, oh, what is this 50 pesos they're doing?
Yeah, right.
Remove it. Even
Okay.
though the tag is on it.
Good.
So I think we can try that one too.
Right.
Ghanaians are used to that.
I agree.
To the fixed without the surpluses.
Good.
But it's only when maybe your VAT charges and those ones come in and the pesos are there, that one they can't complain much.
Yeah, right.
But if it's the tag, they would want you to remove the pesos from it.
Yeah, right. Good. The other thing that you find in some developed environment is where a price is set such that if I give you a discount, it comes to the amount I'm actually looking for. So I want to get 2 CD, 50 pesos on let's say an item, a product. I will quote 4. When you come, I'll give you 1.5 out. Then when you reduce, you still come to how much I'm looking for. So sometimes when you go to some of these shops and they are saying 30% off, don't think that they are doing a jara. Yeah, you impute your strategy. You impute your price into it, knowing how much you are looking for. And then when you take the 30% off, you are still where you are, what you are actually looking for. But in the mind of the customer, he thinks is gaining so much from it. So please, let's keep a record of our assets. Make sure you have document and create a file. Have somewhere, so even when you have an accountant like the name sir John is saying, as accountants, when we come, we are looking for data, and it's easy to work with you if you have files. So if I'm looking for file on your asset, you just pull it and give it to me. And you see, each file will also have a payment voucher because you took money to buy a car. So before you took the money, you write money given to John 80,000 Ghana cedi to buy an oven. When we buy the oven, there will be a receipt. So when I come and pick and the car papers as well. So when I come and pick your file, I will see all the 10 assets you have bought with dates. Because accounting also works in years. We try to keep our accounts so that we can see the performance from January to December. It is key. Even when you are putting up your own building, keep documents. I'm talking about building for the business. Sometimes God blesses you and you want to put up your own building. Whatever money you spend each day, including paying the by day. So you see, at this point, you must create a payment voucher whereby they can come and sign and pay. So you don't go to the site and move your wallet and sharing the money. As a businessman, you rather will print the names of the laborers on a paper. So any labor who John takes by day for a day, he signs against his name. So that becomes evidence that on this day you paid an individual. And that's what we are calling accounting. So everything you do, there will be paper. When you are paying a landlord, don't just give the money out. Give the landlord for him to sign a payment voucher. Being a business, if you paid a landlord without withholding a tax, you'll be required to pay the rent tax. For a business, it's 15% of the value of the rent. Look at how much rent you are paying now. Some of you are paying like 22,000 a month. Multiply by 12, 24,000. Find 15% of 24,000 and see. So if the tax man wants you to pay the amount of money, it is high. Right? And so you must be able to give records. So even if you can't withhold the rent, when the tax man comes, the tax man, this is the payment voucher. I paid him. His house is over there. They will go after him and go and collect the rent. So you are not forced to do so. Also keep record of your liability. Liabilities in accounting are the things you owe. Keep a record of them. Some of you are picking money from microfinance. You are picking money from a bank. You are even picking money from a friend, picking money from a wife, a spouse. It is good to keep record. How much? Even my kids, my daughter keeps some money at home. And when we borrow from the money, I tell her, Gloria, record it. So that when you come, you know how much money you had in your purse and how much you have given to mommy or daddy or a husband or a wife. So keeping proper records is key on all these items. Then, some of you also invest so much in your business from your private money. You start a business with 10,000, but you are working in another place. You are getting rent money you are getting investment money. And so we come to the office and there's something that I need to be bought. There's no money from the business. You put your hand in your pocket and pay. There must also be a record that you, the owner, you keep investing. You keep introducing additional capital. The business owes you. You take rent. You have a tenant who just paid you 10,000. You come and sit there right now. A supplier just pops up. Oh, I came for my money. So before you can even write check, okay, I have money here. Now the amount any panel. Once you are giving the person that amount of money, you have brought in additional money. So your business owes you, or you are increasing your capital. So once you brought that money out, your business must give you a receipt. That this morning on the 5th of March, we took 10,000 from Mr. John, so that we record it as either the business owes you or your capital has increased. So some of you, your business are doing well, not because it's doing well, but because you keep introducing additional capital. You are just so rich that you keep introducing additional capital. And that's what makes you feel that your business is doing well. Then some of you too, the business, you are chopping out of the business. It's a shop. So if there's no milk at home, your son goes to the shop and pick a milk. Right? If a fuel, they can go and put fuel into your car or your wife's car. These are private matters. When they do so, you are taken out of the business. You are running a chop bar, and your friends will come and say, "Oh, why?" So your friends are eating your investment. And so again, when we feed your friends at the chop bar for free, it's not free. It must be recorded that you have taken part of your investment. So at the end of a month, we can tell you, for making 10 of your friends come and eat ebunebunu for free, the value is 300 Ghana. So when we are paying you, as John said, we will pay him less than 300. Out of his salary, he has used 300 to feed his friends for free. You see, so at this point, we'll be accounting for every single investment or taken out of the business. So if you are feeding people for 300 every month, at the end of a year, it may be like, let's say, 30,000. So how do you do a business and feed people for free? You now pass a new rule. Henceforth, no friend should be fed free here. If my friend can, I want to feed him free, I take him home for my wife to cook for us to eat. So again, most of our businesses are not growing just because of these things. Some of you, even in the shop, they come and give them a biscuit, toffee. And I know that in the retail industry, you make about 20 pesos on one biscuit. So giving a friend a biscuit of 1 Ghana means you must sell 5 biscuits to make that one. So you must begin to pull a break. Or you yourself have bought a box of biscuits, which you intend to give it as gifts. So all these things are things you will appreciate if your accounting was done and done well. So that's basically and the whole idea. So virtually, I've spoken about this. Your capital is basically what the amount of money that you are using to run the business. But there's a way to grow the capital. If your capital is growing, then your business is making profits. If your capital is not growing, then you are running in losses. And one of the things that make you run in losses is when your expenditures are high. And so you must learn to control those expenditures. If your business is doing well, that means you are increasing revenue and managing the expenses. You grow a business also if you learn to plow back the profits. Business grows if you don't take out of the profits. So when you begin to feed your friends for free, when you give gifts to people at your shop, you are taking part of your profit. And so your business growth will slow down. That is why I'm happy with John paying himself a salary. And that's a policy all of us must learn. No matter what business you are doing here, learn to pay yourself a certain salary and live within that salary so that your business will be forced to work in a certain way. Now, when we keep the accounts well, accountants know what we call, let's say, a ledger. A ledger is just like a chapter. And so accounting, all the accounts we do are kept in 3 chapters. And so in a chapter, there's a chapter where you can find a record of all the people you are owing, your creditors. So that's what we call the creditors ledger. There's a chapter where you can keep all the accounts of people who are owing you. That's what we are calling your debtors. Then there's a chapter that keeps record of any other thing apart from the people you owe and those who owes you. And that's what we call the general ledger. But these are things that a typical accountant is trained to know. What you need to do as a person is, how do I keep record for every single item? So accounting requires you that you must be able to keep record. So if I ask you, how much have you spent on paying your staff, let's say, overtime in March? You must be able to pull a sheet, an Excel sheet or a paper sheet, or even a payment voucher. So if I add payment voucher A, B, C, C, D, overtime I've paid is X amount. So at every point in time, you must keep records in a way that allows you to do so. And do it for every life. If I ask you, how much tithe have you given to God? You must keep a record. Either you are paying your tithe by a checkbook, so you can add up those January, February, March, or you are keeping a record in a diary where anytime you pay tithe, you've written the date and the amount. So at every point in time, if anybody asks you a question, how much tithe you have paid, even offering, when you come from church, write it down. So the day the pastor is insulting you, you can tell him how much offering you have paid. The day you want God to do a miracle, you can mention to God if he has forgotten about you. That God, me, January to March, I've given offering of 10,000. So you can't allow this to be happening to me. Why are you so ungrateful as God? But when you don't keep the records, then you are not too sure whether you are on the right path or not. But that's the world of having an accountant. Now, when it comes to accounts preparation as well, accountants work within frameworks. There are laws or there are a policy that guides how accounting is prepared. And in the current time we are in, we call it the International Financial Reporting Standards. So those are used by a typical accountant in the work he does. And I'm not sure I want to bother you on those. All we need from you, once another accountant, is a keeping of the basic records, so that an accountant can move in and get your accounts done. So once we come and we can easily track all your sales and all the expenses, all your assets, all your liabilities, we can easily use these same guidelines in preparing to you financial statements, right? All right, so I think my concern should rather be on the financial